Let's go here. 7%. Ooh. Let's see here. Check hands. Okay, trying to see. Okay, trying to see. Can you hear me? You guys can hear me. You can see me. Okay. Okay. Mm, okay.
Hey,
All right, Joseph is on. Okay.
how are you?
Look at us. Doing good. How are you doing?
I'm doing well, doing well. Can't complain.
Yes. All right. So we are on here. We're live.
Awesome.
Let me refresh that and make sure I can, both of us. Yes. All right. We're in business. We lit up.
Awesome.
Okay, good. All right. Listen, my power just went out and came back on. So
Oh, okay.
I'm glad everything worked out.
Right, right, right. That's
And I
awesome.
mean, seriously, I was like, this is
You
not the
guys have
time.
bad weather?
Yeah, we have bad weather here. So
Yeah.
I know you guys are. Okay, hold on. Let's send this quick message here. And then I'm going to be ready. All right.
Okay.
So, all right. So that's a little warm. Okay, cool. All right. So, guys, thank you all so much for tuning in. Let me make sure that we're visible. Everyone can see. All right. So I'm Ivami Kadar, and we are streaming live today to talk to you newbie investors. Okay, that's who this is for. Okay, if you're new, if you're not new to this, this is not necessarily for you. You can still tune in. You might catch some nuggets along the way. Okay,
Mhm.
um, but we have just a couple main topics that we're going to be going through, right? Um, and just a little bit of background. I'll give you guys a little background about myself if you're not familiar, and then Joseph can give some background about himself. But me, I am Ibami Kadar, as you guys know, since you're on my channel. Um, I am a realtor. I'm a pharmacist of 20 years, a mom of four. Uh, as a realtor, I've also invested personally in real estate. So I have done where we've had long-term investments where they were buying homes and we had renters in there. We've had short-term rentals. Um, so I've seen different sides of it. So I can speak to that, my own personal experience, as well as my clients that I've helped with their properties. So that's just a little bit of background about me and what my experience is with investing in real estate. And then Joseph is actually the subject matter expert on the finance side. So, and he
Yes.
also is very, he handles his own, he has his own personnel. So we're not just speaking from like, we're just making this up. Okay.
Right.
We're actually speaking from our own experiences as well. Okay. So
Mhm.
Joseph, if you could tell them a little bit about yourself.
Yeah, most definitely, and thanks for having me. So yeah, guys, my name is Joseph Johnson. I also go as Joe the MLO on any social media platform. So I am a mortgage lender, mortgage broker. I've been in finance. I don't know, probably I don't know, 15 years now or so. And then I went straight mortgage lending. I would say within the past 5 years during COVID. And then, so, I still assist those on the residential side a little bit, but right now my main focus and what we will be discussing today is I help investors. I help investors get access to capital for their deals. Similar to yourself, I'm an investor myself, so I've seen the long term. I've had a few long term rentals, fix and flips and things like that too. So, today we want to help you guys kind of get into the business, or try to get, if you have thought about becoming an investor and wasn't sure how, that's what this live is going to be about. So, it's a little bit easier than what people may think. You don't have to have thousands and thousands, hundreds of thousands of dollars to, get into the game. So that's what we're here to do today. But that's a little bit about myself.
All right, wonderful. So,
Yes.
we the thing about us guys is we are not fluff type of people. Okay, we
Mhm.
didn't come to give you a whole bunch of fluff. It's going to be meat and potatoes.
Yep.
Um, so we want to get dive right into it. Okay,
Yeah.
so let's say we're a new investor, right? Just
Hmm.
getting started into the business. We're interested in getting into the real estate. Um, what is some ways that we can start investing? Let's say we've got $50,000, right?
Hmm.
And I know 50 can be a lot for you guys, so we can start with other numbers. But
Hmm.
generally, 50 is just something that most people have when they're getting started investing.
Yeah.
So let's say with that, what can I do with
With 50 grand.
yeah, with 50
Yeah,
grand?
so it's a couple ways. So depending on what you want your strategy to be, right? So some investors love passive income. So passive income is just getting that monthly rent, buying a long-term rental or doing, like Airbnb, doing a short-term rental, buying a property that's turnkey. You throw a tenant in there or some tenants in there and you collect your money every month. Some investors do like that model. So it depends if you want to go what we call the long-term route, or if you're wanting to do what we call, I guess, where you get a larger payout, but it's a little bit more hands-on. If you want to do what we call the short-term financing, like a fix and flip project, right? So that's something that you can look into as well. Both are great strategies. Again, if we do like what we call a DSCR loan, that stands for debt service coverage ratio, and essentially those loans are for long-term rentals or Airbnb properties. As long as the projected rental income is going to cover the mortgage payment we quote you, you're good to go. We're basing your approval based off that the property itself. We're looking at the asset. We're asset based lender. So we're going to look at the asset more so than we're going to be looking at yourself. But for 50 grand, you can probably purchase a property between 200 and $250,000. 50 grand should cover your down payment and your closing costs. And then you just throw a tenant in there and start collecting your monthly rents. Same thing for a fix and flip loan. Down payment, $50,000 should cover a pretty significant down payment on a fix and flip product where we give you a percentage of the purchase and we cover the rehab. But your down payment, 50 grand, can cover that as well. So yeah, just depending on
Right.
which route you want to go, yeah, that could definitely help.
Right. And hi to the Blue Blur and Jace that are on here. I don't want to act like we don't see you guys that are
Yeah.
coming on. Thank y'all for tuning in. So it's a couple key things that you said there, right? Is and the
Hmm.
first important thing is strategy.
Hmm.
Guys, you can't get into real estate investing if you don't know what your strategy is.
Right.
What's your long-term goal? Are you
Exactly.
trying to what kind of portfolio are you building? Is it going to be
Hmm.
based on you're trying to make a certain amount every month? Is
Hmm.
it something where you want a certain amount of doors? Like, do you want
Hmm.
4 or 5 properties? And, hey, with this 50 grand, I want to help scale to 4 or 5 properties that's grossing me $300 to $500 a month, right?
Right.
It depends on what your numbers are, right? What
Hmm.
your goals are. So the first thing with real estate investment is you have to figure out what's your goal. We
Hmm.
can't get started if you don't know what your goal is.
Right.
Okay.
100%.
We got to know what your goal is because then we can know whether, based on what you're saying, then fix and flip. You might want to flip.
Hmm.
But if you're hesitant to have project management, right?
Hmm.
Managing a project,
Right.
if you're not really about that life, then because a lot of people are like, it's like when I have buyer clients and they're like, oh, I want to renovate. I'm open to renovating.
Yeah.
And then we start looking at these houses and no, you're
Yep.
not. You're not trying to
Exactly.
renovate. You're
It's a lot
not.
that goes into it. It definitely is a lot.
It's a lot.
Yeah.
So, let's just you have to be realistic with what it is that you're trying to do and realistic
Hmm.
with who you are as a person and what you can take on.
Right.
Right. So, if depending on what your strategy is and what you're trying to do, what kind of size portfolio you have that you want to
Hmm.
build, what kind of money you're starting with. So, if
Hmm.
you're like, Joseph, I have $20,000.
Hmm.
What can I do with $20,000?
So 20 grand, I'll be honest, is going to be tough again because majority of these mortgage products for investors, again, we want some type of skin in the game. That's why the down payment requirements are going to be a little bit higher than your traditional mortgage product, right? You're not going to get down payment assistance or first time buyer, FHA, 3% down. You're not going to find those products on the commercial side of things. But 20% down can get your foot in the door depending on the price of the property and the price of the rehab. Now, you might have to pull a little bit more capital depending, you might need to bring in like a what we call a capital partner where two people go on the deal. They don't actually have to be on the loan, but y'all might have a separate agreement, to borrow 10 grand from them until the project is done or something like that. Or what we call a private loan is where you borrow the money from another individual, and give them back a small return, once you finish your project. You may have to go grab, a little bit off of a personal loan. Again, with these commercial style products, we don't really care about your personal, like we look at your personal credit score, but we don't really care kind of how you get the money, if that makes sense. So you may
It
have to
does.
pull a few strings, right? Yeah, yeah. So you may have to pull a few more strings to get a little bit more money in. But again, I say on a fix and flip, on a decent size fix and flip, I say between 20 and 30 you should be good to go if the house is priced accordingly and the
Price right.
rehab is priced. Yeah, yeah.
Right. Yeah. So, and that's an important distinguishment there, guys, is that what we're talking about are investor loans. So that
Hmm.
means these are not on your personal credit. This is
Hmm.
where you formed an LLC.
Hmm.
Okay. This is a business,
Hmm.
and these are business loans.
Yep.
Okay. Now, if you don't have, so when we're talking, you have less than 20,000, then
Hmm.
we might be saying you need to do some house hacking.
Yeah.
Let's do, if you qualify, might not necessarily put this under your business. We might want to
Hmm.
go personal, make sure your credit's right,
Hmm.
and depending on what you qualify for, maybe you can do some first time home buyers. You might
Right.
be qualified for FHA.
Hmm.
It depending on your price point, we can maybe do a mobile home hack if you're interested
Right.
in that, where you can start getting your money with mobile homes and put renters in there. The margins are a little bit smaller, you know what
Yeah.
I mean? And you're not having to put as much money down, and you might be able to see more return on your investment quicker.
Hmm.
Um, so those are all things where it's based on a strategy. And so how kind of the process works is once you decide what your goal is, you would partner with a realtor, partner with a mortgage broker like
Hmm.
Joseph, that's a specialist,
Hmm.
and we sit down and discuss what your strategy is, and then we figure out what's the best move for you,
Right.
right?
Exactly.
Yeah. So, Joseph, tell us kind of how do people get approved? Like,
Yeah.
how do we get approved for this?
Yeah, most definitely. So with these products, again, they're commercial style products. They're for your business. Again, like you mentioned, they're never going to be on your personal credit, but these are approved a completely different way than a traditional mortgage that you would do as a primary residence, right? With this, again, we are asset-based lenders, which means we're looking at the asset. If this property that you want pricing on is going to generate any form of income, 9 times out of 10, we're going to get it approved. So, again, if you're buying a rental property and we know the monthly rent is going to be more than the mortgage payment, you're good to go. If you're doing a fix and flip and you say, hey, Joe, I'm buying a $50,000 house, I'm going to put 50 grand into it, it's going to be worth 150, 175 when it's done. That works for us because we see the numbers. We know you're going to make, pretty decent payout on the flip. Same thing for those that want to get into building. If we have any builders or developers watching, the exact same thing. If you want to build from the ground up, it might only take you $150,000 to build a nice home, but it's going to appreciate, or the after construction value might be 250, 300. We're going to give you funding, for that deal. And same thing on commercials. And if you're buying a commercial property and we know the rental income is going to be more than the mortgage payment, that property is approved. Again, we're basing it all on the asset itself. So the collateral, what are you putting up as collateral? That's going to be super important.
Right.
Um, the next thing, I call it the three C's, to
Okay.
make it easy. So capital, that's going to be number one. That's the first thing we're looking at: capital, the address, the property. What is the deal? What are the numbers on the deal? So collateral, capital. That's going to be the second most important thing, because capital, again, these are not your standard loans, so your down payments are going to be more aggressive. You might need 10% down, 15% down, 20% down, in some cases 30% down, depending on the project. So capital is going to be important. Again, that can be any capital that you have in your personal bank accounts, your business bank accounts, your 401ks, If you need to borrow it from a relative, your rich auntie, whatever. Again, we're not going to source it, or we don't care where it comes from, but we do need to document where that capital is coming from. So if I say, hey, we need 60 grand to close this deal, where's the 60 grand coming from, right? So capital is going to be super important. And then the third C, credit, but credit is a hit or miss, right? We do have some loan products where we don't check your credit score at all. You know,
Mm.
again, if the numbers work on the deal, we'll say screw your credit. The numbers work on the deal, and we don't need, we don't even care what your credit score is or your FICO. Um, so
Right.
that's
I'm you
that's
making money, we making money together. That's all that matters.
Exactly. Right,
Right.
exactly. So those, yeah, the no credit products, those are really big for the fix and flips and the ground up constructions. Um, the one for the long term rentals, like a rental property or Airbnb, I will say you need like a 640 plus, if you wanna do that, because again, that's gonna be your standard 30-year fixed. So we do care about FICO in that instance. But yeah, in some cases, we don't look at the FICO score. So those are kind of the things that we look at to get you what we call pre-approved. Again, if the numbers make sense, you're pre-approved. So the main things I'm going to look at is, hey, what's the collateral? Okay, cool. Do you have the capital to purchase this property? Works.
Mhm.
And may not check your FICO score, your credit score in that instance. So
Just depends.
yeah.
Okay.
Hmm.
Yeah. So couple of things there, guys, is we're always thinking of barriers to entry, right?
Hmm.
So the first thing is the capital.
Hmm.
Team up, right? We are so quick to try and be individuals, but
Right.
we can grow so much bigger together. Team
Hmm.
up. So if you
Right.
find somebody else, hey, say I got shitty credit. Okay. You
Yep.
got 10,000, the other one
Hmm.
has 20,000
Hmm.
or 30,000. Let's put all this together.
Hmm.
One person got good credit, we going with you.
Yep.
Another person got 20, and let's all team up.
Right.
Okay. You can set up agreements, right? Because we don't have to just do these things arbitrarily. You can set up
Right.
an agreement where it's a legal binding document
Yep.
where we've already discussed these things,
Yep.
right? We know when the deal is done, how much money you're going to get, how much money I'm going to get, but we
Hmm.
can network together and we can pool our resources. And that's what Joe's speaking to.
Yep.
Pooling your resources so you can get the collateral you need so you can get started,
Yep.
right?
100%.
So now let's talk because I think I see this a lot too um, with realistic numbers, right?
Hmm.
A lot of times what's going on now is investors are hearing about the rental market and they're not differentiating between short-term rentals and
Hmm.
long-term rentals
Hmm.
because the short-term rental market has people thinking they can make $5,000 a month on their
Right.
long-term rent. It's completely two different things. So like
Yeah.
I was even posed the question of what's an average just like mom and pop investor where I just have one or two homes,
Hmm.
what's an average of how much I should make a month? Like, that's a very loaded question, right?
Yeah.
Because $300 for someone a month extra,
Yeah.
that might be wonderful, right?
Exactly. That's true.
So I think right now, so kind of speaks to like with differentiating between when people are looking at their numbers and
Hmm.
thinking, and I always tell investors for the long term play, what we're looking at is if you're not really trying to put any money in, we can try to mitigate some of your risk by looking at homes of certain age, right?
Hmm.
Or other things like is the HVAC system, has it been replaced? Is
Hmm.
the roof, what age is the roof? What's the age of the hot water heater?
Right.
Some things like that we can help to mitigate costs because we know down the line, like, okay, this roof only has 10 more years, right?
Yeah. Yeah.
So,
Exactly.
over the next couple of years, I kind of got to keep that in mind that
Hmm.
I'm gonna have to take care of this roof at some point.
For
So
sure.
you have an idea of your cost, but kind of speak to that with the investors thinking of,
Hmm.
in your mind, how much money you're going to make every month if you're in the long term buy and hold, or
Hmm.
if you're holding but you're using a short term rental like the Airbnb strategy.
Yeah, for sure. And from a lending standpoint, again, for the property qualify for the DSCR to meet qualification, um, that projected rental income that we're going to get off the appraisal does need to be above the mortgage. So hypothetically, if I say, hey, your mortgage payment is 1,200, and we look at market rents, and it says in the area you can get 1,300, that's cool with us, right? Again, you as the investor or the buyer, you need to make sure
That's
that
cool with
cash
you.
flow is going to be good for you. Me
Right.
personally, no. me 100, gross in 100. You probably wouldn't even gross that if you, depending on if you self manage or hire a property manager. You wouldn't even, so you definitely want to look into that and make sure your numbers work. Um, but I've seen a lot of different deals. Some people are okay in that example for an extra $300 a month. That's worth investing. Of course, we'll break down. Hey, if I put in $20,000, how long will it be until I get that back? Return on investment, ROI, and everything. And when you actually start, fully cash flowing and everything. But that number is going to vary just depending on investor to investor. I know me personally as an investor, I don't. I want to net 500 minimum on a monthly on a long-term rental. Yeah, so if I do the numbers and I'm not walking away with 500 plus a month from that rental property, then chances are my numbers are off. I'm not going to look into that property. So you do have to take into account, insurance is going up right now, property taxes in certain
Property taxes.
neighborhoods. Yeah, exactly. It's crazy. So you want to make sure your numbers are, pretty solid and pretty accurate. And that's what having your team like us is here for. We can help you
Mhm.
break down those numbers and make sure those work for you. But a lot of people are starting to get into the short term rental game, depending on your market. That has been very lucrative for a lot of investors. Instead of grossing or netting 500, a month after expenses, people are doing 1,000, 1,500 easy, depending on their markets and where their Airbnbs are located. So yeah, that's it. That's one. I personally haven't done Airbnb yet, but I know my next one I do want to try it. Just because I get a lot of good feedback from some of my investor clients that do only Airbnbs. They've switched all their short term rentals, to
Yeah, it's messed up the
Airbnb
rental market.
properties.
No, it
Yeah.
messed up the rental market for real.
Yep. Exactly.
It did straight up. It messed up the rental market for like regular
It did.
people.
Yeah.
Yeah, yeah. So
But
yeah, I feel you on that.
yeah. So yeah, so the numbers, yeah, we'll definitely break down the numbers and make sure it makes sense for you, as the buyer or as the investor, to make sure it's worth, make sure that ROI is worth, hey, if I'm, fronting this kind of cash, how long until I get that back, and then the property is kind of running itself, or the business is running itself. But I know, again, for me personally, 500 is kind of my sweet spot. And then
Right.
on the short term rental game, I just know that's it's pretty popular for a lot of folks right now.
Right.
Yeah.
So again, that's what it boils down to is your strategy. What's your
Hmm.
strategy? The location where you're looking at is going to be very essential as well. Like,
Hmm.
you know, outside the box things, not just Airbnb, because short-term rental guys is not just Airbnb, right?
Right.
There's like a list of things. You can even
Hmm.
do like crash pads where you're renting out to airline pilots and flight
Hmm.
attendants. So there's so many different things that you can do, but the thing is, you have to definitely know your area, right?
Yeah.
Now, what about, because I've also heard some hesitation from clients about what do you think the long term look of the market is, right? There's
Hmm.
so much going on right now in the economy.
Right.
Now, my easy answer to this is real estate is a long-term play,
Yeah.
right? It's generally you're getting into it for the long-term play. If you're doing a flipping type of thing, then of course we have a different strategy. We need
Right.
to be looking at, the market value in the area,
Hmm.
um, how long are things sitting on the market,
Exactly.
realistically, because a lot of the times what we're looking for is averages, and y'all know averages kind of suck, right? Because the average can say it's 22 days on the market, and then when you actually talk to me in real life, I'm gonna tell you it's not 22 days, baby. I mean,
Hmm.
unless your property is like top, priced right, it's not 22 days, right? There's always exceptions to the rule. There's going to be some that come on, a house that comes on, and it flies off in 7 days, and then there's some
Hmm.
that's going to sit for 90 days, right? So it's a lot of variables with that. So we're not speaking to like the flipping. We're talking
Hmm.
to the investors that are thinking about buying and holding. What are you saying to those clients right now that are concerned about the market? Should they wait to purchase in case we go into another depression?
Hmm.
Like what are you speaking? How what are you saying to
Um.
that?
Yeah. So for me right now, I am having some investors do bring that up. As far, do you hear something, or is that just me? Do you hear?
Oh,
I heard
I
something
can't
playing
hear.
in the background. No.
No, I don't hear it, but I got bad hearing, but I don't hear anything.
Oh, okay. Uh oh. I'm still here.
Yeah, we're still here. I just
You,
hold on. Okay, can you hear me? Uh-oh.
Can you hear me? Can you hear me? Hold on one second.
Okay, can you hear me okay? I can hear
Yeah, I
you.
can now. Yeah.
Okay, okay, perfect.
Okay, we're good. Okay,
Yeah.
cool.
All
So
right.
yeah, I've definitely had some investors, kind of, teeter totter a little bit as far as like, hey, rates are kind of on the higher end, um, and as far as like, qualifying and stuff like that. But at least for me, again, it doesn't matter if rates were 10%. It's gonna come down to the numbers. And, again, that's kind of the main thing. That's why we invest. If the numbers make sense and I like to use the term, if the number makes sense, then then we do the deal, right? So
Do the deal.
yeah, you do the deal. So I mean, yeah, our rate's a little bit higher on this side of things for investors. Yes, but it's not anything crazy. It's not like a whole point or 2 points higher than the conventional side of things. So it doesn't matter. Again, if even with the rates right now, if I say your mortgage is 1,200 and you're gonna get 15, 16, 1,700 in rent, it's still cash flows. And guess what? When rates do go back down, we go to do that refinance.
Refinance.
Now your cash flow is probably doubling now. So now we're going from that 8% to that 6%. And now we're seeing an increase in, $200 to $300 on monthly cash flow.
Mhm.
So for those investors that are kind of sitting on the sideline, if it's an opportunity, take it. If it's a good deal, I would just definitely hop on it because it's going to be worth it in the long run. Because you're going to shoot yourself in the foot if somebody else grabs it, or you're trying to time the market. You can't time the market. We don't have a crystal ball, right? So we have no clue what's going to happen. So I say take advantage of what you can now.
What you can
if
now.
yeah, if the
That's
opportunity lays in
right.
front of you, then go for it.
That's right.
Yeah.
Like my mother used to say, a bird in the hand is worth more than two in the bush.
See?
So if you have it
Exactly.
right now, if you're
Right.
ready right now, then
Yep.
make the move.
Yep.
So
I agree. Hmm.
good. Good. I think if anyone has any questions, you can type it in the chat
Hmm.
and we'll speak to those. Um, but we covered what investors look for.
Hmm.
Here's one. Okay,
Hmm.
DSCR.
Hmm.
Um, People always talk about the BRR, the buy, renovate,
Oh yeah,
refinance,
the Burr
rent,
method.
the
Hmm.
Burr method.
Hmm.
How do you really get your money out of the property after you purchase?
Sure.
So, yeah, how does that work?
So with the Burr method, this is going to be key because you want to make sure you're getting a property at a discount. That's going to be super key. So for those that do not know, the Burr method, it's like four R's, BRRR. So you want to buy a distressed property. You want to renovate that property. So we're going to do this with a fix and flip loan, a short-term fix and flip loan. So you're going to buy and renovate the property. As soon as you're done renovating the property, you want to throw a tenant in that property. So what we call rent. So buy, renovate, rent, refinance. The type of refinance we're going to do is a cash out refinance. So when we do a cash out refinance, remember when you did the rehab, you forced appreciation on that property, right?
Mhm.
By doing all the upgrades. So, at one point it was worth 50 grand, now it's worth 200,000, so that money is there. The equity is there. You forced appreciation with the equity. So when we do a cash out refinance, we're going to take as much as we can. That way you're going to recoup the money that you put into the deal. You're going to recoup, the 10% down that you put in, the closing costs that you put in. When you do the refinance, you're going to put that back in your pocket. And if we did our numbers correctly, if we, if we did the numbers correctly, you'll get a little bit more. And then you're going to and then you're going to repeat the process. So that product is for people that kind of want to grow their portfolio. And you kind of get the best of both worlds because you're doing a fix and flip, but instead of flipping it, you're holding it, what we call a fix and rent.
Mhm.
So you kind of, you get that experience as the fix and flip investor, and then we're going to turn it into a 30-year fixed cash out refinance. Now you got the DSCR aspect once you throw that tenant in there. So even with the cash out refinance, we already know the numbers work. because the tenant is already in there, right? So yeah, it's a super cool product and a super cool strategy for those that kind of want to get their feet wet and not put a lot of money into it, again, because we're buying a property at a discount, because we're buying a distressed property that needs to be rehabbed. So yeah, so we're gonna buy, rehab, rent, refinance, specifically a cash out, and then we're gonna repeat the process with the money that you recouped from that one deal and put it on to the next property.
Did you see the key word he said there, guys? Distressed.
Distress, yep.
Okay. So when a property is turnkey, you're
Hmm.
paying for someone's renovation.
Hmm.
Okay. And that's kind of how I tell my clients, like, you can get turnkey, but just understand somebody just put their money into this house to get it turnkey for you.
Hmm.
They want their money's worth.
Right, they want top
Okay.
dollar. They want top
They
dollar.
want
Yep.
top dollar,
Yeah.
right? So if you don't want to pay for someone's turnkey renovation, you're going to have to put some
Hmm.
work in, and then
Yeah.
you can get those numbers, right? The key is to purchase it at the right price
Yep.
and make sure the numbers work for you,
Yep.
right?
Exactly.
So I hope that's what, of anything, that's the most important thing that you guys took away today.
Hmm.
Okay. Number one is your strategy.
Hmm.
Know your strategy, figure out what your goals are. Okay.
Hmm.
Number two is, you're going to have to prepare, right? There's going to be preparation involved, whether you're preparing to group some other funds together,
Right.
right? So you can get where you need to go with the capital.
Hmm.
Whether it's preparing with your credit,
Hmm.
if you're not using your credit, then that doesn't apply because you have the capital.
Hmm.
Um, whether it's preparing with doing your research for the market,
Hmm.
um, preparing, like, there's preparation involved, right?
Yeah.
You're preparing because you're starting in a new business. This is a real estate business, is what we're referring to, not just you
Right.
buying your own personal home and moving
Exactly.
in. Okay.
Hmm.
It's a business. So, with that, everything that's related to managing a business has to be taken into account.
Yep.
So, knowing all of your expenses, so your property taxes, what the actual, you can, even if the property's occupied, you can get what the utilities are. The average
Hmm.
was for the previous, you can ask that from the previous owner. Hey,
Right.
what was the electric? If it was rented out, what was the average electric bill? What was the gas
Hmm.
bill? So you get an idea of, if you're funding that, that'll be into your cost, right? It just
Right.
depends on, and this is all up to you, what you're willing to pay for. If
Hmm.
there's a yard, who's going to mow the yard? These
Right.
are things that all have
Yep.
to be taken into account, when you're purchasing a property,
For sure.
and you're managing. So those are the things that I hope you guys got, and you also feel like it's possible, right?
Hmm.
Because you can absolutely do this. That
Oh yeah.
you can do this. There's people doing it. You're no different than those people. If you don't have 30, 40, $50,000 to put down, then go a different strategy. Buy a buyer. Do the way I did it when I was in the army. You buy a house using your VA loan. When you move, you rent it out.
Yeah, that's
It's
definitely a
now
way
an
to start
investment
too.
property.
Yeah, that too. Well, but
You
oh yeah,
gotta.
house hack a multifamily. If you qualify for duplex, triplex, that's one way to get in it for a little bit down. And what I did personally for fix and flip, I borrowed for the money that I needed. The
Mhm.
20% down and closing costs. I borrowed that from someone that I personally knew. Like you can ask family
Friends and
members that
family.
have money and be like, hey, I need to borrow 25,000 after this deal. I'm gonna give you 30,000. You're never going to make that in the market. You're not your CD isn't making that. Your retirement account is not making that. I'm giving you 5 grand in 6 months. You could present those type of things. That's how we structure these deals, hard money and private money together to make it, to make deals happen. So, that's something we can hop on a call and discuss. But there's ways to get into it if you really want to do it. So yeah, just don't be
Yeah,
scared.
so don't be scared. So stop
Yeah.
seeing barriers and start seeing opportunities. If
Right.
you can't figure out how it is today, then prepare. Like, oh
Hmm.
shit, you know what? I can't do it right now. But you know what? If I cut back on my Starbucks, if I if I do one less damn Amazon delivery, if
Thanks.
I
Yep.
start thinking about, do I really need that next pair of shoes? That's for the
Yeah.
Jordan lovers for me, okay? Because
That she in order.
I had to unsubscribe from
I,
sneakers. Like, don't give me no more
that add up.
notifications.
It add
I
up.
don't care what's dropping. Okay,
Right.
whatever you have to do. So it's a sacrifice. It's about
Mhm.
sacrificing for long-term gain. So
Yeah.
you know, shit, all I got to do is I need $200 extra a month,
Hmm.
and that $200 till I get to 5,000, and with that 5,000, like whatever it is, you can
Right.
do it. You know, a lot of y'all right now playing with tax return money.
Yeah. 100%. There you go. Right there.
Tax
That's-
return money. I
yep.
mean, you getting 3, 4, $5,000 from your tax return.
Hmm.
Put that to the side, not under your mattress.
Right.
Okay, don't put
Yeah.
it under your mattress, but put that money to the side. And then when you're ready to go into real estate, you can jump in and you have the
Hmm.
money, right?
Yeah.
So it's about sacrificing. That I saw something the other day that said if you take one less vacation a year, like just sacrifice and don't take a vacation for a couple of years. Okay,
Yeah.
now I'm not speaking to y'all who ain't taking no vacations. Okay, we're not talking to y'all.
Right. 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 We
Okay,
talking
we
about the
talking to the
travelers
people. We talking to the people that's spending $3,000, $4,000 on a trip.
on the trip. Yeah. Yeah. 100%. That's true. It's ways. It's ways. You
It's
just gotta
ways
want it
to
bad
do
enough.
it. You have to want it bad enough,
Yeah.
right? So $3,000 in 3 years, that's I got
Hmm.
$10,000. That's my down payment.
All right.
I can't do it today, but I can do it,
Hmm.
right? So that's what we have to think about, and think about the long term play. Don't let these folks scare you talking about no depression, no
Right.
terrorists.
Yeah. All
Because
that.
I'm telling you, the same people that's talking about that is over
Mm.
here buying up real
Oh
estate.
yeah, real estate for days. Yeah, every millionaire and billionaire you know has some type of real estate.
Got real
That's
estate in
it's the
their
safest
portfolio.
investment, bro. It doesn't matter, regardless of what economy you're in. People are always gonna need housing. Remember that.
People will always need
Whether to live in
housing.
it, rent in it, and if you have some of those doors, you're taking advantage. So
You taking advantage. That's
yeah.
that's that's it at the end of the day. So
Hmm.
whether there's a lot of us right now where we went to refinance and they did not let us refinance. It didn't
Hmm.
work how they thought it was going to work. But
Hmm.
what I say to that, you guys, is you trying to refinance under your personal loan.
Hmm.
These are business investments that we're speaking of,
All right.
okay? And with some of those, maybe you are able to pull the equity out of your personal home and use
Hmm.
that equity to
Yep.
build your real estate portfolio or
Yep.
investment
A lot of
portfolio.
investors, a lot of new investors that I know, they do that. They have a lot of equity in their home. We'll either do a cash out refi, or if they're scared of changing their interest rate, we'll do a home equity line of credit. Now that line of credit you can use for this deal. Once you pay it back, use it for the next deal. That line of credit stays open. Now use that appreciating asset that you have to purchase more.
Exactly. So now
Yeah.
your house is no longer a
A
liability,
liability, exactly.
it's an asset,
Yeah.
right? And that's what we're talking about. So that's why we're here today. I hope you
Hmm.
guys took something from this,
Right.
okay?
For sure.
Because this is free information. And a lot of you guys, when things are free, you all don't take any advantage of it.
What?
Now, the thing is, we only gave you all a little bit, but we gave you enough for you to go do some research.
Oh, 100%. Yeah.
Go do some research, go do some
Hmm.
learning on your own, educate yourself, learn more about those tactics. I'm not telling y'all to pay anybody to
Right.
learn,
Right.
because there's a lot of free information out here,
Hmm.
okay? And you can hit me up.
Oh
You
yeah.
can hit Joseph up. We will answer
Anytime.
you guys' questions. If you
Hmm.
just have simple questions about strategy and what you're doing, you don't understand what the loan is and what
Hmm.
we can help with that, guys. That's
Yeah,
what we're here for.
for sure.
Okay. So I don't see any more questions in the chat. Joseph, thank you so much. Guys,
Of
we're coming
course.
back. I'm
Of
having
course.
Joseph back.
Oh yeah.
Okay.
We're gonna keep
I'm
doing
going to have
this.
him back. We're going to keep doing this because we're going to help you guys get into properties this year. This
Hmm.
is the year. As this market is turning, it's a buyer's market, y'all,
Hmm.
especially in that
Especially
Atlanta
now.
area.
Oh yeah.
Buyer's
That's
market.
true. All type
I
of
don't care,
incentives and yeah.
all type of incentives.
Yeah.
I don't care what they say, because right now I can run a market data for you guys and it says it's a seller's market. But baby, it
It's
is
not.
not.
It's definitely not.
It's not.
Yeah. Y'all can definitely take advantage right now.
You can take
Hmm.
advantage. These sellers, they want to make deals, they want to
They
make
want to.
money.
Yep. They want to
Their
sell. Yep.
houses, they want to sell. Like
Hmm.
people want, and then guess what? They're willing to negotiate because it's
Yeah.
25 other houses. And I know this for a fact
Yep.
because I'm showing houses, y'all. If we can go look, if for that price point, I can go show you 10 more houses, and I'm not
Hmm.
playing.
Yep. You got options.
It's options. It's
Definitely.
options. So, yeah, so hopefully you guys were inspired because we shared our own personal stories, so
Hmm.
you all know it's possible. Don't if once somebody says no today, it could be a yes tomorrow. It doesn't matter.
Yeah.
Just keep it pushing and stay your plan, keep working your plan. So,
Definitely.
I'm gonna have Joseph back in 2 weeks. You guys know
Yep.
I'll follow the same format. I'm gonna blast it on social
Hmm.
media. I will blast it on this YouTube so you guys know. And then next time we come in, y'all have more questions,
Yep. You're gonna
right?
bring it back.
Because you've done your research or you went and talked to somebody and they did this and you want to know what you can do. And
Hmm.
that's what we're here for.
Definitely.
Okay. All right. Joseph, do you have
Awesome.
anything that you want to
No,
plug
I'm
in
ready to
with?
help this, ready to, help as many new investors as we can. Let's
For
get
sure.
going.
And then if you want to drop your contact info real quick, your socials, and I'll make sure I
Yeah,
put it in a post description as well so you all know how to get in touch with Joseph.
got you. Am I able to check? I can check, right?
Hey, hey, Legacy Tribe. Yeah, if not, then you can. Yeah, you should be able to throw it in there, and I'll make sure I add it to the description too when we're done, so they can have your all your contact. Thank you so much for joining. Legacy Tribe, we're just about to get off, but
You got to catch the next one. It didn't let me drop
yes,
it, but for those that wanna, I could give it to you and you can place it in there. But
yeah, please
all
do.
social media
That way.
platforms is gonna be Joe the MLO, so JoeThemlo, or my company Joe Fund My Deal. And yeah, feel free to reach out. Any questions, any concerns, shoot me a DM, and we'll get you taken care
Absolutely. Oh, Nia. Hey, Nia. Yes, I
of.
know it's. Yes, hey, Nia. No, no, we're just getting off. But 7 o'clock is a good time. But yeah,
Yeah.
no, we was at. You just missed it. Joseph just dropped so much nuggets on there and really blessed these people. And actually, I'm gonna have on Nia as well because she's the subject matter expert on mobile homes. So she has a
Oh,
whole different way.
that's
Yeah,
exciting.
it
Yeah,
is. It
that's an
is.
untapped market too. So.
Untapped market, and a lot of people
Definitely.
don't know anything about that. Okay,
Yeah,
yeah,
for
so
sure.
absolutely. So thank you guys so much for tuning in, and we will see you next time.
Yes, we will. Y'all have a great one.
All right, for
All right.
sure.